we have looked at the principle of do skill, care, and competence. We want to look at the principle of integrity. A. Auditors should behave with integrity in all professional, business, and personal financial relationships. Integrity implies not merely honesty, but fair dealing and truthfulness. B. Auditors should strive for objectivity in all professional and business judgments. Objectivity is the state of mind which has regards to all consideration relevant to the task in hand. It is bound up with intellectual honesty. And integrity are not things you see, is about the mind. C. Auditor must not accept or perform work which they are not competent to undertake unless they obtain such advice and assistance as well as to enable them completely carry out the work. Just like I said at that time, you don't, because you are looking for money, any job that comes, you just grab. No, you don't work that way in auditing. You must take the job that you are competent enough to handle. Auditor must carry out their professional work with due skill, care, diligence, and experience, and with proper regards for the technical professional standard expected of them. Auditors should behave with courtesy and consideration towards all with whom they come into contact with during the course of performing their works. Then, professional duty of confidence. A. Clients expect the business affairs to keep confidential by their auditors. Maintaining clients and hence confidentiality may mean that auditors cannot blow the whistle on malpractice of the clients, and hence such malpractice will be allowed to continue. What we're saying here is that except that thing is going to affect the company negatively, or you also consider looking at the position of the law, because a normal good day, you don't go about talking of what to see in the client's business with someone else. B. It is recommended that information acquired in the course of professional work should not be disclosed except where consent has been obtained from the client, employer, or other proper source. Where there is a public duty to disclose, or where there is a legal or professional right or duty to disclose. What I'm saying here that if peradventure you need to disclose, there must be a consent from your client, except where that it becomes necessary that the court of law mandates you to do so. See, an auditor who acquired information in the course of professional work should neither use nor appear to use that information for his personal advantage or for the advantage of a third party. No, you must not use, peradventure you are auditing a company as an auditor, and you now see that there are things after you have earned your work, you can't come back and now begin to use it against such a company, because they paid you for the service that you render to them. D. In general, where there is a right to disclose information, an auditor should only make disclosure in pursuant of a public duty or professional obligation. E. Where an auditor agrees to serve a client in a professional capacity, both the auditor and the client should be aware that it is an implied term of that agreement that the auditors will not disclose the client's affairs to any other person except the consent of the client is given within the term of certain recognized exceptions. Now, this has become something that is very key. As an auditor, we must bear this in mind, that you must not at any point in time disclose it, except there are exceptions. Like I said, if it becomes in the public interest, if you do not disclose this, it probably people's life will be affected. You are maybe the company where you are auditing, and you discover that they are producing inferior goods that could damage the health of majorities of probably Nigeria. You can say, you can't keep that. In such a case, there are exceptions that you cannot seek the injunction of the court to be able to do so. But if not so, you don't do so. So there are recognized exceptions as follows. 1. If the auditor knows or suspects his client has committed the offense of transom, he is obliged to disclose all information at his disposal to a competent authority. Suspicious of terrorism or drug money laundering also giving a rise to a duty to report. The auditor should consider whether non-compliance with law or regulations affects the financial statement. First off, an auditor should include in his report a statement that non-compliance has led to significant uncertainty, or non-compliance means that the auditors disagree with the way certain items have been treated in the account. 2. Where there is a public duty to disclose, e.g., where an offense has been committed which is contrary to the public interest. 3. Where disclosure is compelled by law, for example, where there is an action in a member and requires to give evidence or disclosure of documents. 4. If an auditor is required or requested to assist the police, the state internal revenue services, federal inland revenue services, or other authority by providing information about a client's affairs in connection with inquiry being made, he should be satisfied that such information is demanded. First of all, unless he is satisfied that such or statutory authority exists, he should decline in giving any information until he has obtained his client's authority. If the client authority is not forthcoming and the demand for information is pressing, the members should not assent unless so advised by his solicitor, that is, by his lawyer. If an auditor knows or suspects that a client has committed a wrongful act, he must ensure that he has not prejudiced himself by, for example, relying on information given by the client which is subsequently proved to be incorrect. It should be a criminal offense for an auditor to act positively without lawful authority or reasonable excuse, in such a manner as to impede with intent to arrest or prosecute of a client whom he knows or believes to have committed an arrestable offense. Requirement as objective, principle of objective and independence. Objectivity and independence. An auditor's objective must be beyond question. That objectivity can only be assured if the auditor is given to the independent. The trait of independence may be reduced by the nature and extent of the precautions taken by the auditors to guard against loss of objectivity. The following circumstances may prove traits to objectivity and independence. undue depend on audited clients or these clients. Objectivity may be threatened or appear to be threatened by undue dependence on any audit client or group of connected audit items. How? It is recommended that in general, the recurring work paid by one client or group of connected clients should not exceed 15% of the gross practice income. In the case of listed or other public interest companies, the figure should be 10% of the gross. What does it mean in this place? That is, the job that he wants to take should not form the 15% of your gross income, because if such happen, you begin to so much rely on the clients for your daily living. So I think we need to stop here for now.